We are live with episode 7 of the Tailored Property Wealth Podcast. My name is Casey Taylor. I'm the host of the podcast. And today we're talking about, is the residential Australian property market going to crash? I've managed to build a multi-million-dollar property portfolio in just a few short years. And I want to inspire and motivate other Australians that if I can do it, so can you. The Tailored Property Wealth Podcast has been created to help educate, mentor, coach, and support you through everything relating to property investing to make sure you go out there and make a much better educated decision when investing in property. Please like, share, subscribe, and share this podcast with anyone who you think might see value in it. If you listened to last week's episode, you'll know I'm recording 2 episodes in one go, so I do have a little bit of a man flu. So you'll have to bear with me with my voice if it sounds more weird than usual. And last week we spoke about why invest in residential Australian real estate. And that might set us up and lead into this episode as to, is the residential Australian property market going to crash? Many mainstream media outlets are always banging on about the property market's going to crash. They've been doing it for decades, like I said in the last episode. One of the really important ones I can remember from not too long ago, it was 6 years ago, but it was 2018. And at that time, I remember, I think it was on a current affair, and they were talking in depth about the Australian property market, the Australian property market going to crash by 40%. Massive prediction of 40% drop. And what happened? Same as it always does. It never happens. 10 to 15% correction is normal in every single cycle as we go through it, okay? Like I said in last week's episode, it doesn't just consistently go up year on year every single year. You have to understand that as a property investor. And today we're just getting into lots and lots of data that's going to show you what's going to happen to property, and it's not going to crash. All right, so let's get straight into it. Shortage of homes relative to demand. Touched on it in last week's episode, and we're going to go into some really specific numbers that are recently out, just to really showcase what's going on. So the construction industry, it's been in a bit of turmoil since COVID. We obviously had material shortages and everything that happened with that. Prices go through the roof. Builders weren't making the margins that they were. So that's where you hear some crazy stories, and we've got some clients where the contract went up by like 70K. So property's not worth anymore, but you got to inject more into it just because their margins weren't there. So from July 2023 to March 2024, 2,142 building companies went into administration. Now, that is massive numbers, and I guess that depends on the individual builder. How many homes are they building each year on average of those people that have gone into administration? That right there is going to negatively impact the supply that can be added, that we desperately need, right, because of the overarching increase of demand coming in, which we'll touch on. So further stats, it's a little bit more dated, but 1,400 businesses collapsed in the second half of 2023 in the construction industry. So that those two pieces of data merge into each other a little bit, but it just highlights the numbers and the issue that we've got going on. All right. So according to KPMG, 37,000 building approvals in Australia remain uncommenced. All right. So the approvals come through, but it is yet to commence. And that's because of some of these other stats that I've just touched on, that it's delaying things moving through. And it's great to get approvals through, right? But approvals really don't mean anything if that approval doesn't turn into a physical house built and that physical supply that we need. So annual building approvals at 162,500 were well below the federal government's target of $240,000 homes per year last year. So that's a pretty substantial shortfall. It's almost 80,000 homes. So if we've got, I think the average number of people per home, the ABS, it has reduced. It's definitely under 3 off the top of my head. But for every 80,000 homes, and we times that by 3, what's that number of people that aren't getting that supply? So because of that, houses in established areas, they're gonna have a lot of pressure because the supply just isn't keeping up with the demand. All right. So the ABS released some data in April 2024. Dwelling approvals have decreased 0.3% to 13,078. Obviously not much of a decrease, but we want that number to be increasing with the amount of demand that's coming in. So even though it's pretty much staying the same from that number, because of the demand, we really need that to increase. So overseas migration stats for 2022-2023, net annual gain of 518,000 people. It's a massive, massive amount that have come in 2022-23, I should say. So what happens with people that move to Australia, and this might not be all people, but first of all, they need somewhere to live. All right, so it's going to put pressure on the rental market that already has pressure on it. We're in a rental crisis. We've got vacancy rates at historic lows, super, super low. Like I said on last episode, vacancy rates where we're purchasing are under 1%. So it's putting pressure on those. A lot of these renters will turn into purchasers in the future. And because of that, that's going to increase sales activity, sales volume, and it's going to continue to push prices higher. Okay. ABS data on migrant arrivals, there's been an increase of 73% to 737,000 from 427,000 arrivals a year ago. Migrant departures decreased 2% to 219,000 from 223 departures a year ago. So massive amount of increase in people coming in, and then we've also got less people leaving. So population is just surging at the moment. Now, the new budget actually is aiming to reduce the number of people coming into the country to what has been happening for the last year. So I think the target 2024 to 2025 is 260,000, and then 25-26 is 255,000. So it is, I guess, a lot lower than some of what we've kind of seen at the moment, but it's still massive numbers, right? So yes, it might be halving, but 260,000 people, whilst on the other side of that we have that supply issue, it is going to continue to put that pressure on the property market as a whole, whether you're looking at a rental property or whether you're looking to purchase. Okay. Thank you for listening to this episode of the Tailored Property Wealth Podcast. I hope you're learning lots and getting lots of value out of this episode. If you want to discuss the opportunity of working with us here at Tailored Property Wealth, jump across to the website www.tailoredpropertywealth.com.au, complete the contact form, let us know that you're listening to the Tailored Property Wealth Podcast, and let's reach out, let's have a chat and see how we can help you execute on your property goals. Now, if we go into listing levels, and this one's super, super important to take a look at because the areas with super low listing levels are the areas that we're purchasing in because we understand what's going on there at the moment. But they're also the areas that are performing, right? So it's something to understand. Perth and Adelaide listing levels are 40% below the 5-year average. And Brisbane listing levels are 34% below the 5-year average. This is data released from CoreLogic for June 2024. So there's less listings coming to the market, there's less options, and that is putting pressure on on prices, right? So in 12 months' time, prices are going to be higher than what they are today. Rates in the next 12 to 18 months will most likely be lower. It's kind of changing and going up and down as to where rates are going to kind of start to drop back. But it'd be probably fair to say in 12 to 18 months' time, rates are going to be lower than they are today, even if it's only by a small amount. Because rates have been on hold, many, many people are coming back into the marketplace, and we'll see that data in a moment. So as soon as rates just drop a little bit, what's going to happen? Everyone's going to go, oh, yes, it's going to cost us a little bit less in repayments. We might go out and purchase that investment property, or we might go out and purchase that owner-occupied property. Whatever it is, it's going to increase the numbers that are active in the market. It's going to put pressure on prices, and they're going to grow, not crash. I guess, yeah, we'll touch on that in a moment. Building approvals are down 15.4% in 2023 compared to 2022. So data's obviously a little bit old, but that kind of stems into where we are now, because that's going to directly impact what's coming through. Now, the data that I was speaking of, the ABS data, April 2024, investor lending is up 36% from a year ago, and owner-occupied is 18% up from a year ago. So some massive numbers that are increasing in terms of people going out there, getting financed and making that move. And why that's happening is because if we go back to 12 months ago or even 18 months ago, looking at the start of 2023, we've got mainstream media and we've got economists out there banging on about how property prices are going to go backwards this year. There was some, I can't remember the exact numbers, 10, 12%, whatever it was. What happened? Property prices continued to increase, and that's because of this fundamental supply issue we've got going on. Now, we've been in a position where rates have kind of held for a 6-month period. They haven't increased, and we start to get used to that as people in the economy, as borrowers. We start to adapt. We start to adapt to that change, what our cash flow is going to look like, and we understand we can manage this. Rates have been at historic lows when they were at 0.1% was the cash rate. Historic low, money was so cheap to go out and borrow, whereas now it's just kind of fallen back into a natural part of the cycle over the long term, the average cash rate. So what people are now doing is going out and taking that action. They're investing in property, or they're purchasing the owner-occupied property, and things are starting to ramp back up from a borrowing perspective. All right, so it's just important to note, and we haven't even seen a rate drop yet, and inflation recently up above the expectation. So that's still kind of lingering. It's probably going to push out where the rate drops now a little bit further again. But it would be fair to say 12 to 18 months' time where we're going to see rates lower than where they are today. I've got my fingers crossed because obviously I'm holding a large amount of debt. So it will be a big amount of cash flow that will kind of be freed up and just keep purchasing property. That's my goal. Cool. So that's just a lot of the data side of things, nerding out with the data, but it's just black and white, right, on things that are going to be those precursors to see what happens in 12 months' time, 18 months' time, 2 years' time. When mainstream media are out making headlines, when they're doing whatever they are and saying property prices are going to crash, are they really? Where's the data to support that? Because it's a lot of clickbait. Just remember that's how they are generating money and what they thrive on. They're looking for those views. They're looking for those clicks because that's how they justify their existence. Okay. And it is preying on the fear. And because we're so heavily invested in residential Australian property, it's an easy grab. It's always going to be in headlines. It's never going to get old because we do have an interest on that residential Australian property. Okay. So when someone's saying property prices are going to crash, let's really understand what's going on, because that will really highlight, I guess, those precursors. Listening to this episode now, understanding the fundamental supply and demand issue we have going on, I like to call it the pressure cooker. This is why you should be out there and you should be investing. If you have the borrowing capacity right now and you're not out there purchasing property, in 12 to 18 months' time, it's going to be a painful lesson for you to learn, because the property that you could have purchased today for $550 is going to be $600 to $650, and so on, depending upon that price point. Prices are on discount to what they're going to be in 12 months' time. That is the reality, because of all these things that I've kind of just gone through today. All right. So go out there, get your borrowing capacity in place, go out there, purchase the property and hold it long term, because you're going to do well in the next couple of years if you're investing in property. All right. It's an exciting time as an investor. I'm at the moment going out and making another couple of purchases just because I know what is going to happen over the next couple of years. I want to get my hands on as much land as possible because of this pressure cooker. All right, it's just going to continue on and keep going. So I really want to kind of see those numbers increase from a supply perspective, and that's something that I'm implementing in my own strategy at the moment. Is I'm making a couple of purchases and I'll be adding granny flats to those, so I'm positively contributing to adding supply into some of those areas and more options in terms of rental properties. So that's something that, I'm taking action on in the short to medium term, just to be able to help out in those ways that I can. Hope you guys enjoyed this episode. Again, it's only a 16-minute episode. I've really pumped through the data there today, but it just gives you a really good understanding of, is the Australian property market going to crash? Well, I should not struggle with that, considering I talk about property every day. The reality is it's not going to crash because of that supply and demand issue that we've got going on. And if you're taking action, you're going to reap those rewards. So get out there, get your borrowing in place, take action, smash your goals, and set yourself up for financial freedom in the future. Not just for you, but for your family, the family you're building, or your future family, right? Go out there, take action, smash those goals. Thanks for listening, guys. Make sure you jump across and share this with anyone that you think might see value in the episode. Thanks for listening, and until next time, bye. Thank you for listening to this episode of the podcast. If you don't already, make sure you follow us across all of our social platforms. That can be Instagram, YouTube, LinkedIn, Facebook. I wish you all the best out there on your property investing journey, and I hope each decision you make in purchasing more property gets you closer to your goal of financial freedom.